Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do now one question where shares are issued at discount and pro rata allotment is made. According to Companies Act 2013, latest company law, companies are not allowed to issue shares at discount except where shares are issued to employees or very few other cases. Here, as an example, we will be studying that shares are issued at discount. Let us read the question. Global IT Limited issued 1 lakh shares of rupees 10 each at a discount of 10%. Discount of 10% will be applied to this 10 rupees, which comes to 1 rupee discount. In share of rupees 10 issued at rupees 9, that is at discount of rupees 1. Payable as follows: on application rupees 3, on allotment rupees 3. Here they have said in bracket discount, means at the time of allotment we are actually required to collect 2 rupees for shares, and there we'll have to adjust 1 rupee of discount. First call 2 rupees, second and final call 1 rupee. Here you should note one thing: in the absence of information, always adjust discount at the time of allotment. Here they have specifically given. Public applied for 1,20,000 shares. Here size of issue is 1 lakh shares, whereas application has been received for 1,20,000 shares. So this is a case of oversubscription. The directors made pro rata allotment to the applicants. Show journal of company, assuming that all money received on allotment and calls. Total number of applications received for 1,20,000 shares. Company intend to allot 1 lakh shares. Means application received 1,20,000. Allotment is to be made 1 lakh. So now we can calculate ratio or proportion of allotment. It can be 12:10, or we can simplify this. It is 6:5. That means a person who has applied for 6 shares, we have allotted him 5 shares. This is called as what? Pro rata proportion for pro rata allotment. Let us draw journal for recording journal entries relating to this issue. First entry we are required to record relating to application stage, where company is receiving application amount from the public. In all, application received 1,20,000. On each application, company receives rupees 3. First entry is bank account debit 3,60,000 to share application account 3,60,000. That is on 1,20,000. Company has received per share 3 rupees, being application amount received on 1,20,000 shares. Next entry will be for transferring this application amount to share capital. Share application account debit to share capital account. On 1 lakh shares, 3 rupees each is transferred from application account to share capital account. Here we end with first stage, that is application stage. After this, company demands allotment amount from the shareholders, and accordingly we are required to record entry for allotment amount due. While passing this entry, we are required to adjust amount of discount, that is rupees 1. On allotment, rupees 3 is adjusted, where 1 rupee is for discount and 2 rupees for share capital. Share allotment account debit 1 lakh shares 2 rupees each, 2 lakhs. Discount on shares account debit 1 lakh shares, per share 1 rupee, 1 lakh. To share capital 3 lakhs. Being allotment amount due after adjusting discount rupees 1 per share. Now according to this entry, we are required to receive rupees 2 lakhs from the shareholders. Shareholders at the time of application have paid 3,60,000, of which application amount we have adjusted 3 lakhs. That means we have 60,000 rupees excess. This excess application amount will be adjusted with this amount due 2 lakh rupees. Application amount received on 1,20,000 shares, per share 3 rupees, 3,60,000 less application amount on allotted 1 lakh shares. One lakh multiplied by 3 lakhs. 3,60,000 minus 3 lakhs. 60,000 is excess application amount. Amount due on allotment on 1 lakh shares 2 rupees. After adjusting discount of rupees 1, we are required to get 2 lakh rupees. 60,000 already we have. That will be adjusted first. Excess application amount 60,000. So 1,40,000 will be amount finally due on allotment. This is the amount shareholders are required to pay towards allotment, because already we have excess application amount of 60,000. Well, company has received all allotment amount. Entry will be bank account debit 1,40,000, share application account debit 60,000, to share allotment account 2 lakhs. Being allotment amount received and excess application amount adjusted. With this we have completed allotment stage. Let us proceed for the next stage, that is first call. Here they have given first call amount is rupees 2 and company has received whole of this first call amount. Share first call account debit on 1 lakh shares 2 rupees each, 2 lakhs. To share capital account, being share first call of rupees 2 due. The whole of this amount is received from the shareholders. So next entry will be for receiving first call amount. Bank account debit to share first call account, being share first call amount received. Final call is of rupees 2 per share. So company sends final call letters to the shareholders demanding final call amount. So we are required to record now entry for final call due. Share second and final call account debit 2 lakhs. To share capital account 2 lakhs. Next entry will be for receiving final call amount from shareholders. Bank account debit 2 lakhs. To share second and final call account 2 lakhs. Being share final call amount received. With this we have completed all journal entries relating to the question. In this problem we are required to note one thing, that shares are issued at discount, which is not a normal activity in case of company, as new company law has a restricted issue of shares at discount. Shares can be issued only in exceptional cases at discount, for example to employees. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.